Hey traders, before we get started with today's video, I wanted to let you know about today's video sponsor, Longhorn FX. Longhorn FX is a Forex and CFD broker that allows traders to trade with up to 1 to 500 leverage, trade all sorts of different cryptocurrencies, currency pairs, stocks, indices. It has a wide range of things available to traders with, again, leverage options that are very flexible. Additionally, their Trustpilot score is 4.6 stars out of 5, which is pretty impressive. They also offer free strategies and indicators that come with joining their newsletter, which will be linked down below in the description for you in case you'd like to grab some of those free PDFs. This also includes their free ebook that you can get by joining the newsletter. In addition to this, Longhorn FX offers free daily analysis with their viewers to keep up to date with what's going on in the markets. If you'd like to see more about Longhorn FX, check out the link down below in the description and see if they are a fit for you after doing your own due diligence. Now onto the video. NFP today came out a little bit mixed, and I want to go over the numbers here today and talk about a few things like gold, the indices, and the dollar. Let's jump in. All right, guys, so a quick breakdown as to what we actually saw here today on the NFP jobs numbers. So let's go back to, of course, this week. We were taking a look at Friday's data, and we did, in fact, get a lot of red folders here. So red folders just, of course, denoting high impact news. And so when we take a look at this, what you've got is we had unemployment rate, non-farm employment change, and average hourly earnings. How did all of these things impact the markets, and will it drive the markets going into next week? That's the question. Average hourly earnings were up. What this shows us is, of course, month over month, we saw wage growth increase. So we saw some raises and that sort of thing. Of course, that's great if you're somebody who got a raise. But in terms of what the Federal Reserve is wanting out of things, this is not so great. Because again, wage growth means more people are going to have more money. They're going to go out and spend more money, and that's going to contribute more to inflation, especially the consumer-based inflation, which is, again, hurtful to everyone. And the Fed does not like it, so they raise rates more often. However, we got some conflicting stuff here where we got less than expected. We were expecting 224,000 jobs. We got 209,000. And then in terms of course, that's in the direction the Fed wants, less people hired. I know it sounds weird, but again, in terms of trying to, the lesser evils, they're trying to get rid of inflation. Less jobs is kind of what they want. In terms of unemployment rate, 3.6% was expected, and we got that number as is. So when I say mixed, we got kind of numbers here that go both ways. Some good, some bad in terms of what the Federal Reserve wants. I want to start out with the NASDAQ. I do have a position open on the NASDAQ, and by the time you guys see this video, after it's been edited and put up on YouTube, there may be some changes to what you're seeing here.
I've waited years.
I am still long in this general area. I'll show you guys my position. So this is, of course, my trade setup. I'm just barely in profit, up about $210 at the time of filming this video. And again, I'm still long biased on the NASDAQ until we break support structure here. So you can see my stop order is in place. If you're wondering what platform I'm on, this is Webull. As a US client, I can't trade CFDs, so things like SPX 500 or NAS 100 or US 30. I can't trade those things. They're illegal in the United States. So I have to trade them, trade the ETF equivalents or the futures equivalents on a stock or futures brokerage. So just a little bit of transparency. If you want some more information about the broker I'm using, there is a link down below in the description. If you sign up using that link as a US client, you'll get free shares, and so will I, just to be transparent with you. We both get free shares if you do use that link. It's a pretty cool offer, so check it out. Anyways, NASDAQ I'm still long on, and we're going to keep an eye on the NASDAQ. We'll come back to this though. Essentially, I am long unless we break through market structure here. This is kind of my line in the sand where I will stop out if this does not hold. Let's also talk about the dollar. So of course the dollar had a really interesting reaction to this news, and it's kind of in line what you might expect. If you have one thing that's positive for the dollar and one thing that's negative for the dollar, it would actually make sense that the candle would kind of look like this, right? One positive, one negative thing kind of shoots it in both directions. Well, we had a big push down initially, and we broke through the support level. However, we're looking at a 4-hour candle chart. I can actually switch to the 1-hour chart, and we can now, with the benefit of it being 9:05, we can see how the hourly candle closed. And what you'll notice is that it was kind of a disappointing breakout. So price did shoot underneath, but the follow through was not there, and price was able to push back into what has been sort of this support zone for the last few days. So what I would say is that if you're watching this and you're a dollar bull, this is great, right? We've actually been able to hold this support zone even if it was messy along the way. But if you're a bear, this was not so great because again, we saw no ability to hold these breakouts. Now, of course, if something happens and we break back underneath and we're able to close, then perhaps dollar bearishness is back into play. But for now, this favors the range-bound traders. If you're a trend trader like myself, this is kind of just like I'm just going to stay away from this until it breaks one way or the other. I need momentum to trade profitably, or at least my strategy to trade profitably, the strategy that I implement so often, trailing stops and that sort of thing. So when we get these back and forth moves, I'm not able to really capitalize very much on those. So like I said, I'm looking for breakouts on the dollar, and that brings me back to gold, which of course, similar story, right? When gold is moving down, the dollar is usually moving up, and when gold is moving up, the dollar is usually moving down, right? So a little bit of vice versa there. For those of you guys watching gold with me going into next week, I mentioned this on the stream here today, this level and this level. I asked viewers to mark it on their charts because again, a breakout either direction here could actually be interesting to me, either on the long or short side. I'd really prefer the long side, but again, we'll have to see what the market decides. Right now, it's very mixed, and follow through has not really been there for gold bulls or bears. Again, kind of a range-bound market. And it brings me to another question that we've been getting recently. What's the next big catalyst for the markets? Wednesday is, of course, CPI next week. Now, CPI is probably our next really big report where we're going to get insights into what inflation has been doing in the month of June. So keep an eye on that one. We will, of course, be covering that on the live stream. And I want to take a quick second here to remind you guys, if you have not already, make sure to subscribe to my YouTube channel for updates and market analysis throughout the week. So let's keep going and talk a little bit more about some other trade setups. Here's dollar yen. Dollar yen had a big push down, but found some support here. I don't love this chart on the 4-hour chart. It just doesn't have the market structure that I like to trade. So let's keep going. Let's take a look at euro yen. Euro yen broke through support that became resistance beautifully. Not loving this chart either. It does not seem to be very directionally biased. Let's take a look at GJ. GJ, I did actually take a trade on earlier this week, but I did get stopped out for break even. So I ended up taking the trade here. Price jumped. I moved my stop to break even and fortunately got out of there just in time before a big drop. So of course, break even trades are nothing to necessarily celebrate, but it's certainly better than taking a full-blown loss, and managing my risk is what I'm all about when it comes to trading. So will I get back into pound yen? Probably not immediately, because again, it didn't quite hold the structure that I was looking for. If I was to look to get back in, perhaps it would be like a pullback into the support zone where we saw a really strict strong bounce off of this area. So possibly a pullback play. Again, when I look at seasonality, I mentioned this on my live stream. Let's take a quick look at SPX 500. We are expecting for indices to see positive growth in the months of July and August. So we'll keep an eye on this one. We could take a look at other things like, for example, let's see if we can find gold, right? For the gold traders out there, we're expecting a positive August, which should be interesting, and a mildly break-even July. This is, of course, using historical data. We can also take a quick look at the smart money tracker for those of you guys who like to keep up with this. If you are a COT-based trader like myself, what we're looking at is what institutional money, the smart money, the professional traders, what are they buying and selling? And feel free to pause the video if you'd like to take a look at it for yourself. This is showing long to short, most bearish to most bullish assets on the list according to what institutional traders are up to in terms of their futures contracts holdings, according to the CFTC's weekly reported COT data. Okay, so also I should mention, if you guys would like access to these tools or you would like to try them out to see if they are fit for you, we do have a way for you to do that. In the description down below, I am going to include a link that will allow you to check out and trial out the software for yourself. It comes with free consultation calls or meetings if that's something you're interested in doing, but it also gives you free course material and training material on how to actually use our software and benefit the most out of it. So whether you're already an EDGEFINDER user and you'd like to go through those guides, or you're somebody who is interested in our software but would like to see if it's actually a fit for you, click the link in the top of the description for a trial and more information, or perhaps a tour. Thank you guys for watching and have a great rest of your day.
Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.